The U.S. markets had a dreadful week last week as investors reacted to the Fed's latest interest rate decision. In today's video, we'll be going over the returns from last week, more on the Fed's decision and how that could shape the markets over the next few years, and also two key news stories that we're paying attention to for this coming week. All four of the major U.S. indexes were down last week, and the Dow Jones was down about 3.5% and had its worst week since October of 2020. Now, with that being said, the Dow Jones is still up almost 10% for the year. The S&P 500 was down just under 2% last week, the worst week it's seen since February of this year, but still up almost 12% for the year. The Nasdaq was only down about 0.25% last week, up 9% year to date. And the Russell got hit hard last week, down over 4%, but still the Russell 2000 up almost 14% year to date. Foreign and emerging markets were both negative as well, with foreign markets down about 2.5%, while the emerging markets were down 1.4%. Now, foreign markets keeping pace with the Dow Jones and the Nasdaq this year, up over 9%, while emerging markets are still having a good year, up over 6% for the year. The major news story we were paying attention to last week was the Fed's interest rate decision based off the current inflation that we're seeing. And the Fed came out and said that their intent is to have 2 interest rate hikes in the year 2023. Now, initially, the markets got spooked off after that news, but it's not all doom and gloom. Since 1990, U.S. large caps have actually averaged about an 18% total return over the 2 years preceding initial Fed interest rate hikes. Also, equities have outperformed bonds over that same time frame by over 6%. And we're actually seeing this rebound this morning, on Monday morning whenever the markets opened, as the S&P 500 and the Dow Jones are both up over 1%. Now, moving on to the current week, there are two main events that we're paying attention to. First, Fed Chair Jerome Powell speaks about the coronavirus and also the Fed's most recent policy decision that we just talked about. Then on Friday, the personal consumption expenditures, also known as PCE data, comes out. And this serves as the Fed's primary gauge for inflation. Now, this number is supposed to come out right around 3.4% year over year for the month of May, which will be the fastest gain that we've seen since 1992. So we may continue to see some volatility this week based on how investors react to both of these reports for the first week of summer. Thank you for watching our video, and if you're watching on YouTube, please subscribe to our channel. If you're watching on Facebook, please follow our page.